The YOLOBOX Pro kicks it all in. It is live. Thank you, YOLOBOX Pro, for making that happen. Welcome to Justin R. Harris, my channel, investments, real estate, stocks, crypto. You know, we cover it all. Obviously, the common stuff that's going on right now is, you know, where the economy is going and how that really affects everything that we're doing. I think that the biggest concern we all have right now is, what does it mean for us? What's coming up? I'm sure you guys saw the topic of today's discussion, higher interest rates. And what does that mean? I know everyone right now is speculating. Okay, so higher interest rates, higher interest rates. Justin, I know that. I know it's coming up, you know, but what does that mean? You know, how soon are we going to see those higher interest rates? Is it always going to be, a jump here, jump there, or is it the unknown? And I'm going to be able to answer that for you on today's discussion. We're going to talk about those numbers. I know what those numbers are. The other conversation that I have that I wanted to bring up is, the common information that we already know. We know that the Consumer Price Index report came out June 10th, right? And that's even still significantly screwed. Those numbers are a lot further off than people know. They're based on averages, and so the averages aren't really reflecting what's actually really happening. The people that know what's really happening are your daily, everyday people who are out there right now and spending the money. That's the crazy part. So we're gonna cover that. I'm like tiptoeing here and there because there's so many juicy topics that I really want to get into right now, to make sure that we all get it out there. Checking my switching mode here back and forth because I know we have so much going on that, a part of my setup, I'm always talking about my setup. I like my setup. It's a great setup. When I upgrade my monitor, when I finally upgrade my monitor, I'm actually going to switch you guys into what it is that I'm reading to you too, and make you feel more involved. I'd like to use like some whiteboard concepts that I have on there, and just kind of draw you in a little bit more as my audience grows with a lot of these videos right now, covering just the juicy facts right now of what's going on and what it means for you. A lot of people right now, stop watching the news. Look, I'm not a financial analyst. I am a real estate investment specialist with Keller Williams. Primarily, my specialty is commercial and your investments, but it's across all of real estate. Here in the state of Florida is where I'm located, and I cover that entire region. And then, we can go into details from there. So when it comes to a global thing, hey, listen, do your homework. And that's kind of what I'm doing right here for you, is I'm trying to show you that what I like to do is do the homework for you, explain it maybe in a different way that you haven't heard, so that you know how to prepare. It's great. Oh, there's a fire, there's a fire, there's a fire. Okay, that's great. We know there's a fire coming. So now let's talk about how do we prepare for the fire, right? I'm not here to play on your emotions. I'm here to prepare you. I want you to understand what's happening and what that means for you, so that you know what kind of steps you need to do to go forward to prepare for things that are out of your control. You're not out there making the decision right now with the Federal Reserve and so forth on what you think is the better direction to save the world, right? Our nation. So what you can control is what bills you're going to pay, what expenses you're going to take on or drop, right? And what direction of your assets you're going to go in. And that's what I like to do. I want to channel it down to you so that you know what you're supposed to do, because at the end of the day, you can sit and wonder, or you can start to have a plan, right? So a lot of the conversation that I wanted to have, without drawing it out too much, is, okay, so interest rates are going up. It's no secret. If you go on the Federal Reserve, it's boring reading, but if you go there, they publish everything. It's already scheduled. Okay. I'm telling you right now. You want to know the dates? I'm going to tell you the dates right now. Get ready for rates to go up, your interest rates to go up across the board, 0.5% scheduled this month, 0.5% scheduled next month, July, September, November, December. What does that mean? Well, if we already know we're going to go up 1.5% in the next 3 months, counting this month, okay, that's crazy. And so if those numbers are scheduled to go up, what does that mean? Why are they scheduled? What are we fixing? How does that fix anything by making things impossible? And I'm going to tell you why. It's a term called quantitative tightening. See, we have applied in the past 2 years the exact opposite, and it's called quantitative easing. Quantitative easing is one word that we have screwed ourselves with here, and you can thank your people above us in politics and all that other great stuff. Quantitative easing has occurred through our stimulus. Oh, it was nice and gravy. You got your nice little check. You went out and did the things you need to do. Smart people either invested it because they were ahead of their bills or got caught up on their bills, and all the little derivatives thereof that fell in after that, your forbearance programs and all these different things to help save people, right? And then you had those people out there that were opportunists that we saw them on the news, right? That went out and bought a Lamborghini or did something stupid with that stimulus money, the PPP money, the EIDL money for businesses, which I have a whole concept on how that should have been handled, but it was not. It is what it is, right? So at the end of the day, now without Monday morning quarterbacking all of that crap, because what am I supposed to do now? That's already happened, right? So there's nothing I can do about that now. What I can do now is focus on where we're headed, right? I know I can make a left turn or I can make a right turn. I don't have to keep going straight, right? So in this case now that we know that, here's the thing. Okay, if quantitative easing has put too much money out in the economy and screwed us, right? Now we're experiencing the inflation that has occurred. Think about other countries where that has gone in an extreme fashion. I'll give you a prime example. Countries like, what did I look up? I was just looking it up a second ago. Zimbabwe, right? $1 billion bill. Like, come on. Venezuela. Like, all right, so if the dollar is going to lose its value, think about the United States. We are a global presence for our currency, right? What is it? A world reserve currency. And if our world reserve currency is losing credibility, we have a problem. And so the United States is not going to let that happen. So they're drastically going to start attacking that, okay, and working towards that to prevent from those, because then we lose globally the positioning we have as a superpower. So forget you and I worried about the grocery store and the cost of a pound of ground beef going up 15%, whatever those numbers may be right now. Okay, we're talking about on a global scale, the United States and its position and this beautiful life you might be living here. And even our poor here is still well above the poor in most other countries, right? Now, I'm not saying that they should be happy, because no, it's all relative, right? They're here, and poor here is a different kind of poor than a poor there. They're going through the same things. However, I can tell you the biggest difference is that the poor here or unemployed can go and get a job where over there you couldn't find a job to be given, right? So there are different circumstances, and then obviously then you have medical reasons and this and that, and that's why we have the economy the way we do and things set up with programs and so forth, so I'm not going to justify it, and nor am I going to say that it's not a problem, because it's all different types of problems, right? But focusing on what it is that we're talking about, the way we're going to fix things is through quantitative tightening. Now, so Why do I bring that up? Because if we continue, we are going to fast forward into what is called hyperinflation, which is like what countries like Venezuela have and are going through, right? And we can't do that. What is hyperinflation, by the way? So I Googled it because I want to give the term according to what I identified on here. I think Google is a great source right now. It's like today's Encyclopedia Britannica. I tell you guys all the time, right? And it states, in economics, hyperinflation is a very high and typically accelerating inflation. It quickly erodes the real value of the local currency. We don't want to do that, right? As the prices of all goods increase. Sound familiar so far? This causes people to minimize their holdings in that currency as they usually switch to a more stable foreign currency. So usually in other countries, they switch to our dollar. What we don't want is that those countries switch to another country's dollar, the euro or the yen, because then we start to drop in categories. We no longer become the dollar that is accepted anywhere to purchase goods and trading everywhere, right? No matter what language you speak, they see a dollar bill, they're on it. You know what I mean? So we have to think ahead like that. Now, understanding that term, I immediately looked up the next term that I have spit out to you guys, and it is hyperinflation. And I want to make sure you understand that with hyperinflation, we also need to understand how to fix hyperinflation, to understand what it is that the feds are doing. Back to what I said in the beginning, feds raising interest rates. It's happening. This is not Justin sitting here telling you guys what I think is going to. Go to the federalreserve.gov.com. Go there. Okay. Their publications are there. Their calendar is set. Now, who's to say they can't change things? Yes, of course they can. But what you don't understand is with quantitative tightening and the situation that we're experiencing right now, these are things that are a must. If you know you're running out of gas and you're driving, it is a must that you find the nearest gas station. Well, guess what? The feds are trying to find the nearest gas station. All right. That's the best way I can explain it to you. We're trying to find the nearest gas station and we need to put gas in the car. Okay. So hyperinflation, according to Google, is ended by drastic remedies such as imposing the shock therapy of slashing government expenditures or altering the currency basis. One form of this may take its dollarization or the use of foreign currency as a national unit currency. That's not going to happen. I can tell you that. However, so let me tell you what we are doing here in the U.S. and what that quantitative tightening is going to require. Okay. What you're going to need to pay attention to is the interest rates going up, which I just told you. Pay attention. There's actually scheduled July 13th is going to be the next inflation report, which is going to be for June. Okay, so watch what those numbers look like right now for a gallon of milk, because when that report comes out, you're going to see the new number, right? So I'm just prepping you mentally for that, because this is not a joke. Okay, I know I'm trying to make this as easy and understanding and entertainment point as possible, but I want you to plan ahead. This is not a joke. I'm all about investing. Be smart with your money. If you need to get caught up, go get caught up. Get to work. There are jobs out there. My business is hiring. I'm hiring, right? So, like, get out there. Get to work, okay? The other thing, so planning ahead, if you can buy assets that can position you to create passive revenue streams that don't require your time so that you can work and then that your money is working for you while you're sleeping. These are the ways you need to be thinking right now. You need to figure out how to leverage your time, because let me tell you, otherwise time is leveraging you, right? So let's not let that happen. I like those rhyming focal points because sometimes that's what makes people get it, right? So Quantitative tightening, what to pay attention to. I just told you the rates have to come up. Okay. The real interest rates right now are negative. That number needs to come up above inflation in order for us to finally see a change. Timing wise, and how long the things that the feds are getting ready to do right now are all going to be according to how the economy, the public, us, react expense wise to those changes. Okay. So prime example, you want to know what to pay attention to know how this is being triggered and when it's going to happen? What are the feds directly related to? Watch the bonds and securities first in the market. Pay attention to that. When they start pulling that number, which it's stated on how hyperinflation works, like the quantitative tightening and how to correct and what are some of the measures that are taking, you can Google this information. One of the things is pulling back bonds and securities, and it is the mature ones. So when they pull back the mature ones, you're going to start to see those numbers drop. Then you're going to start to see the panic sales in the market, and there's your rally. I just told you guys, pay attention to the real rally. Okay, now I've just given you, that was last week. Now I've just given you the key focus. Don't get caught up in the sucker rally. Watch for the real rally. And the real rally, the key to what is getting ready to happen with the real rally is the removing of the security bonds in the market. You watch that happen, you're going to see the panic, and there's going to be the drop. Okay, and I would assume that drop, timing wise, we don't know that number because they have to watch, because they don't know how far that needs to keep going before things start to correct. So it's going to be a time base there. It's not going to be a drastic drop, but what is going to be a single day quick drop is going to be the sell-off real fast right after that. That's going to be the panic sales. Okay, now right before that is probably going to be the rally. So it's hard to judge all of that and know what's really going down, but don't get caught in a sucker rally that happens. Understand what's really going to happen. That might be the sucker rally, because then we're going to see the big drop and not know how long the big drop is going to go and fall for. It's like not knowing where the ground is, right? You throw a penny down there and you wait for it. You don't hear it. Ding. That's a problem, right? So you're not going down there. You don't know where down there is. It might go so far down it becomes up, right? So pay attention to that. Those are the different things that are going on. I wanted you to understand exactly what those steps were as we move forward, because quantitative tightening is the tool that is to start the engine. And this is what's getting ready to happen. If there's anything that you need to look that up to understand, but the interest rates are going to go up. So when's the best time to buy? Everyone knows this in real estate. It's right now. If you can afford to, right now, do it now. Grab your assets, get buckled down, hold on tight, right? And get ready for the ride, because people need to do what they need to do. And then you just make sure that those assets are assets that you can control. Okay. If you can't, then you need to worry about your bills. Okay. But like I said, pay attention to those different things, what you can control with your money, pay your bills if you have to, and get ready. Thank you guys for checking in. I had to give you those updates and clarify some things for you as we move forward. I'm going to go and relax for the rest of today. And I'm hungry. Like, subscribe. Thank you guys on Facebook. Click that like, follow. I'm going to keep doing this. We keep doing this. We keep just dropping amazing information. You see the channel building, right? Build with me. Like, share, right? Get your friends and everybody on board. Let's keep going. Let's do this. See you guys. Be safe.